Hello student, this is the third part of the money and credit class 10th. In last lecture, we have seen loan from the cooperatives. Then we discuss about the home loan, then terms of the credit, collateral, all these things we discussed in the previous part. Now come to the formal sector credit in India. There are two sectors, formal and informal sector. So here formal sector loan and informal sector loan, these are main sectors for the credit. Among the former are loan from the banks and cooperatives. The informal lender include money lender, traders, employers, relatives and friends, etc. Graph 1, you can see the various sources of credit to rural household in India. Is more credit coming from the formal sector or informal sector? Means there are two sectors for taking the loan, formal and informal. So percentage are given here. Money lenders, people get the loan from money lender, they are 30%. Traders 3%, then relatives and friend 7%, and other again 7%. This is about the and landlord 1%. This is about the informal credit source, and formal credit source, that is cooperative societies and nationalized bank or commercial banks. So commercial banks percentage is, it is 25%. People goes to this source for getting the credit, and 27% people they approach for the credit to cooperative societies. Then the Reserve Bank of India, role of the Reserve Bank of India, it is very important in the formal source of credit, because Reserve Bank of India control all these activities of the credit. So Reserve Bank of India supervise the functioning of the formal source of loan. First instance, we have seen that banks maintain minimum cash balance out of the deposit they receive. The RBI monitor bank in actually maintaining cash balance. RBI takes initiative for monitors the banks actually maintaining the cash in balance. Similarly, RBI sees that bank give loan not just to profit making businesses and traders, but also to small cultivators, small scale industries, to small borrowers. Means this nationalized bank or formal sector that gives loan to this not only for the profit making but for providing the services to whom? To small cultivators, peasant, small scale industries and to small borrowers for fulfill their needs for availability of the or raising their capitals for their or inputs for their production. Periodically, banks have to submit information to RBI on how much they are lending to whom, at what interest rate. Means as we discuss, Reserve Bank, RBI control all this activity, what amount has to be given to the particular borrowers, what would be the interest rate. All this control, it is of the RBI on this formal sector. There is no organization which supervise the credit activities of lenders in informal sector. There is no such a organization, just like which, that is Central Bank of India or Reserve Bank of India. There is no such a control on the informal source of credit. They can lend whatever interest rate they choose. Interest rate, it is depend upon the money lenders or urgency of the borrowers. Heavy interest rate they impose on the borrowers. There is no one to stop them from using unfair means to get their money back. Compared to the formal lenders, most of the informal lenders charge a much higher charge that much higher interest on the loan. Informal lenders, those who are informal lenders, they charge very high interest on the loan because it is not regulated or controlled by the RBI, just like formal source. Thus, the cost to borrower of informal loan is much higher. Higher cost of borrowing means a larger part of earning of the borrowers is used to repay the loan. Means if the borrowers gets the loan from informal sector, then most of the part of their earning that goes in the form of repaying loan amount. Borrowers have less income left for themselves, and that is why borrowers left very less income. Most of the part of their income goes for the repayment of loan because of high interest. In certain cases, high interest rate of the borrowing can means that amount to be repaid is greater than the income of the borrower. This could lead to increase debt, which we saw the Rama in Sonpur, and debt trap because repayment of loan is not possible or it becomes very hectic for the borrowers, and that situation arises, that is called a debt trap. Also, people who might wish to start an enterprise by borrowing may not do so because of the high cost of borrowing. For this reason, bank and cooperative societies needs to lend more. This would lead to higher income, and many people could then borrow cheaply for the variety of needs. They could grow crop, do business, set up small scale industries, etc. They could set up new industries or trade in goods. Cheap and affordable credit is crucial for the country's development. So one thing is clear, that what is important or crucial, cheap and affordable credit, it require or it is very crucial for the development of our country. Then formal and informal credit, who gets what? Graph 2 that is here below. Blue, it is indicate percent of the loan from the informal sector, and purple indicated percentage of loan from the formal sector. So poor household, they get loan which is 85% from the informal sector, because it is not possible to them to keep the security or collateral in the bank. That is why they approach to the informal sector, and only 15% people they goes for getting credit to the formal source. And in the second, हाउसहोल्ड विथ द फ्यू असेट, जिसके पास कुछ असेट है, प्रॉपर्टी है, तो देयर रेशियो इज 53 and 47. Means here 53% people, those who are having few asset, they goes to the 53%, they approach to the informal, and 47% people they goes to the formal. And in third, that is 28% and 72%, that is well off household. 72% they people, because they have asset in for keeping collateral in the bank, and that is why 72% people, those who are well to do family, well off household, they approach to the formal sector, that is 72. And they only 28% of people they goes for getting the credit to informal sector. And last one, rich household, those who have lot of asset for keeping in the bank in the form of collateral. So 90% rich people they approach and they get easily loan from the formal sector, and only 10% people they approach to or they goes to the informal sector from rich household. This is the graph 2 which we have discussed. So here same thing it is given here. In this people are divided into 4 groups. Mainly people they are divided into 4 groups, from poor to rich, as shown in the figure just we have discussed. So here 85% of the loan taken by the poor household in urban areas are from the informal sector. So 85% people from poor household they gets credit from the informal, where rate of interest is much more. Comparing to this with the rich urban household, what do you find? Only 10% people, which we have seen in the last figure of this graph, only 10% of their loan are from the informal sector, and 90% loan from the formal sector. It is about the rich people. So 90% they are from the formal sector, because they get easily from the banks against their collateral. Similar pattern is also found in rural areas. Rich household are availing cheap credit from the formal lender, whereas poor household have to pay heavy price for the borrowing. In formal sector already you know rate of interest is less, and rich people they get easily from the formal sector or nationalized bank or cooperative bank. But those who are poor, 85% people they gets credit from the informal sector, whose rate of interest is much more. What does all this suggest? First, the formal sector still meets only about the half of the total credit needs of the rural areas, and remaining credit needs are met from the informal sources, where rate of interest that goes much more. Then most loan from the informal lenders carry very high interest rate and do little to increase the income of the borrowers. Borrowers का income बहुत कम होता है इसमें, because most of the part of their income goes in the repayment of loan to the informal sector. Thus, it is necessary that bank and cooperative increase their lending Bank and cooperative increase their lending, particularly in the rural area, so that depend on the informal sources of credit reduce, because most of the poor people, they depend to the informal sector for the credit. So credit, there is need to increase the credit for poor people in rural areas by this formal sector. And secondly, while the formal sector loan needs to expand, it also necessary that everyone receive this loan. Means there is need to receive everyone, those who are needy, they have to get the loan from the formal sector for the development. At present, it is richer household who receive formal credit, where the people have to depend on the informal sources. It is important that formal credit is distributed more equally, so that the poor can benefit from the cheaper loan. If the formal sector expand their credit, then poor people, they get benefit of the cheap loan activities. Then last part of this lesson, that is self-help group for the poor, or in short it is called the SHG. In previous section, we have seen that poor households are still dependent on the informal sources of credit. Why is it so? Banks are not presently everywhere in rural areas. So, even when they are present, getting loan from the bank is much more difficult than taking the loan from the informal sources. As we have discussed about the collateral, poor household, rural people, they do not have the collateral for keeping in the formal source. That is why formal source of credit they ignore or deny for getting the loan to poor people, rural people. This is the problem. As we saw, for the mega bank loan require proper documents and collateral. Absence of the collateral is one of the major reason which prevent the poor from getting loan from the loan. Bank loan means, what is the barrier for getting loan from the bank? That is collateral or documents. Informal lenders such as money lenders, on the other hand, know the borrowers personally and hence are often willing to give the loan without collateral. In informal source, they get the loan without keeping any documents or collateral, because personally they are familiar. Money lenders are familiar. The borrowers can, if necessary, approach money lender even without repaying their earlier loans. However, money lenders charge very high rate of interest, keeps no records on the transaction, and harass the poor borrowers. So in recent year, people have tried out some newer way of providing the loan to poor. The idea is organize rural poor, in particular women, into small self-help group SHG and pool or collect their savings. Typical SHG has 15 to 20 members. Means 15 to 20 members, they comes together, pool their resources for getting the giving loan to needy poor household, usually belonging to one neighbors who meet and save regularly. Saving per member varies from 25 rupees to 100, even more than 100, depending on their ability of people to save. Member can take small loan from the group itself to meet their needs. Means members, members, those who are saving or members of this SHG, they get the loan from very less interest and easily without any collateral they gets the loan through this SHG, सेल्फ हेल्प ग्रुप, जिसे बचत गट के नाम से भी जाना जाता है. The groups charge interest on this loan, but this is still less than what the moneylender charges. Means their rate of interest that is very nominal. After a year or two, if the groups is regular in saving, it becomes eligible for availing the loan from banks. Means if the credit is there of this group SHG in the banks, regular repayment or a saving, then they get loan easily from the bank, but that is by the name of group, not individual. So is sanctioned in the name of group and meant to credit self-employment opportunity. Aim for getting the loan from bank to this group SHG just for what? Self-employment opportunities or production. For the instance, small loans are provided into the to the members for releasing mortgage land, for meeting working capital needs, for that is buying seeds, fertilizers, raw material like the bamboo and cloth, all which inputs for the production process, for the housing material, for the acquiring asset like sewing machine, then handlooms, cattle, whatever need for the group members, they get easily from the loan from the bank also. Most of the important decisions regarding saving and loan activities are taken by the group member. Means group members control these groups for important decision. The group decide or regard the loan to be granted, the purpose, amount, interest to be charged, repayment of the schedule, etc. Means all these decisions related to loan conditions, that is purpose, then amount, what would be the interest, then repayment schedule, all it is decided by the group members. Also it is the group which are responsible for the repayment of loan. Any case of non-repayment of loan by any one member of the follow up seriously by other members in the groups. Because of the future, banks are willing to lend the poor women when organized in SHG, even though they have no collateral. If you go to the bank, poor people goes to the bank without collateral, they doesn't get the loan. But if the member, SHG member is there, so by the name of group, they gets the loan without collateral. Thus SHG, SHG, self-help group, help borrowers overcome the problems of lack of collateral. They can get timely loan for the variety of purpose and at the reasonable interest rate. The rate of interest, it is very affordable or reasonable. Moreover, SHG are building blocks of the organization of the rural poor, and not only does it help women to become financially self-reliant, the regular meeting of groups provide platform to discuss and act on variety of social issues such as health, nutrition, domestic violence, etc. Means work of this SHG, it is not limited to pool their resources, saving or keeping in the banks or getting loan. But apart from this, this SHG self-help group works on the different issues for the development of the group member and for the society. They arrange the health workshop, nutrition workshop, domestic violence, rules, laws, all this means um, in such a way SHG's work is very important and significance has grown about the SHG nowadays. So here come to the page number 52 in your textbooks, Gramin Bank of the Bangladesh. Here Gramin Bank of Bangladesh is one of the biggest success story. It is biggest success story in reaching poor to meet their credit needs at the reasonable rate. Started in the 1917 as small project. This bank started in 1970 in the form of small project. Gramin Bank now has over 6 million borrowers. See here, this is not small figure. 6 million borrowers in about 40,000 villages spread across the Bangladesh. Almost all the borrowers are women. Most of the borrowers, they are from the women population, being to poorest section of the society. Most of the borrowers, they are from the poorest section of society, because formal source of credit generally they do not get loan because of lack of the security or collateral. But this bank, Gramin Banks, gives the priority to the poorest section or borrowers, but that they can start and run the variety of small income generating activities successfully. And this bank become very successive in income generating activities. Those who are taking loan or borrowers, they get the earning through the economic activity, and then becomes easier for repayment of the loan, because all these activities, they are income generating activities. So here is given, if the credit can be made available to the poor people on the terms and conditions that are appropriate and reasonable, these millions of small people with their millions of small pursuit can add up to credit the biggest development wonder. It is of the this saying or thought, it is of the Professor Muhammad Enes, the founder of the Gramin Bank. This Gramin Bank is eager to give loan or borrowers those who are poor, and they recipient 2006 Nobel Prize for the Peace. So in the last part of this lesson, summing up, in this chapter, what we have looked at the modern form of money. We have seen different modern form of money, even check we have discussed. Even in this book it is not given, but you might have known the how money can transfer from bank to bank without use of the money. Transaction of money, it is possible from bank to bank, or different apps are there, and it is very convenient. So carrying money for the purchasing, it means it becomes very easier to the purchasers. Without carrying money they can purchase because of having debit card, credit card, then transfer through the banks. Then they are linked with the banking system. All it is possible because they are linked with the banking system. On one side are depositors who keeps their money in the banks, and on the other side are borrowers who takes loan from these banks. Means these are the two main people of the banks. Credit borrowers, those who borrow money from the banks, and depositors, those who keeps money in the bank. Both these people, they are important for getting the earning to the banks, because those who are depositors, they keeps their money in the banks, and all this money bank do not keep in the itself with itself, but this money utilized by the bank to the borrowers for giving the loans. Only 15% of the deposits, total deposit का 15% amount that keeps in the bank for the daily transaction, and remaining 85% money that goes for the giving credit or loan to the borrowers. It is utilized, and that becomes the earning of the bank. Economic activity require loan or credit. Any economic activity, it is not, they are not possible without the loan or credit. Credit, as we saw, we have a positive impact, or in certain situation makes the borrower worse off. Credit, they are important, or one of there is a positive side of the credit, and another negative side, or that makes the borrower worse off, where repayment is not possible. With example we have discussed in this lesson. So credit is available from variety of the sources. This can be either formal sources or informal sources. Terms credit varies substantially between formal and informal lenders. Means at present, it is richer household who receive credit from the formal sources, whereas poor have to depend on informal sources where rate of interest is more. It is essential that total formal sector credit increase. It is important for the development of the country or development of the poor people. They have to expand the loan activity, to whom they have to expand formal source of credit whose rate of interest is reasonable to the poor people, so that dependence on more expensive informal credit become less. Also, the poor should get much greater share of the formal loan from the banks, cooperative societies. यदि ऐसा किया, if the formal credit expands, then their share for this formal loan activity would be increased, by whom these poor people. Both these steps are important for the development. So this is the end of this lesson. Okay student, good day.